everybody. How are you? It is August 30th, Thursday. It is our final summer of live. Excuse me, I got a little bit verklempt there because I was thinking about it being our very last summer of live. You can see I'm ready for football. I'm sporting my team colors here. And I couldn't be more excited to have my guest for today for our last live. It's going to be an amazing hour. We have so much to cover, so I'm going to let her introduce herself. Amy Northard is here. Please tell us about yourself and how you work with bloggers.
Sure. Like she said, my name's Amy Northard. I'm a CPA for creatives, and I'm based out of Indianapolis, Indiana, but I work with small business owners all over the U.S. And we work together on taxes, bookkeeping, quarterly taxes, all of that fun stuff that I know you guys love to talk about. And my goal is basically just to make all of that stressful stuff less stressful. So we figure out how it applies to you in your business, give you a plan to move forward with it, and then it's just one less thing that you have to worry about.
So that is incredibly exciting. And I know that you mentioned the thing, it's hard because it's a thing that a lot of people just feel very lost at sea about. We kind of have the same thing with ads. Like, it's something that is not intuitive and doesn't go hand in hand with the business of blogging, but it's such an important thing that people have to take care of as business owners.
Yeah, it's something that you can't just ignore and keep ignoring, because the longer you ignore it, the more it stresses you out, first of all, and the more it could become a problem.
Exactly. And then, yeah, I'm guilty of that. It's kind of like not doing like your laundry and then you have no clothes and the laundry pile is incredibly high. So we've got a ton of viewers in here, and we're here for your questions. So please feel free. Hello, Zona. Hi, Michelle. Hi, Sherry. We're here. We're excited to have you. I'm going to go ahead and start with a pretty broad question for you. So Amy, tell me a little bit about the unique accounting challenges that you've seen your influencer clients face. What makes it such a difficult thing for them?
I think probably the biggest thing is that so many of your expenses overlap with the personal side of your life. So, I work with food bloggers, fashion bloggers, and they are, they need to produce content, but a lot of that stuff the IRS says is a personal expense. Like if you are, blogging about your family's dinner, then you technically should probably not include that as a business expense unless it's being sponsored or something like that. So that's the tricky part, is so much of what you're doing to provide income for yourself and create content is also overlapping into personal. So I think getting that sorted out and figuring out what you can deduct and what you can't is super important.
And let's go ahead and segue right into that. So let's just move right to our expenses category, because it's something that it's hard. Yeah, I need rice for my life and for my children, but I also need it for this recipe that I'm blogging about. So what kind of expenses can bloggers deduct? And maybe we can run through some of the specific niches that you've worked with.
Yeah, so let's start with the food bloggers. With that, if it is, if you are blogging about recipes that you're making, you can for sure deduct any expenses that you have to incur to complete an agreement with a company. So if you are working with a pasta brand and they say, we're going to pay you $500 to put up this sponsored post, but we want you to purchase our pasta and make this type of dish. So you can't fulfill your agreement with them unless you go out and purchase these things. So when you do that, keep those expenses separate from personal groceries. So run it through separately. I know some things like table salt and that kind of thing is probably going to overlap, and you're not going to necessarily want one whole thing of salt for the blog and one whole thing of salt for your personal life. But as best as you can, separate out the groceries and put one on your business card and one on your personal. And that way you're treating it like a business, and you're showing, if you were ever to be questioned, that these are considered business expenses and you weren't just blogging about your family's meal plan for the week so that you could deduct it. if that were the case and you could deduct every single thing that you blog about, the whole world would be bloggers, and they would be trying to deduct their whole lives. So that's the thing you have to keep in mind, and the reason why the IRS doesn't allow you to deduct everything, even if you do need content to keep your blog going. Switching gears to fashion bloggers, a lot of the fashion bloggers I work with are in a similar situation. You know, you're buying clothing, which the IRS deems as personal expense. But if you're working with a brand that says, you know, hey, here is payment, but we need you to go to our store, buy a shirt and a top or a shirt and bottoms and do a post about fall fashion. Then in that case, you had to fulfill your agreement with them by going to the store and buying things for it, and you could deduct it. But if you're just going to the mall, buying a few things that you'll wear outside of work, then you don't want to deduct that stuff. And that's where it gets into personal versus business.
And it stinks because we all want to deduct the clothes when we go to the mall, but
I know. If we could figure out a way, I would have found it by now, but I haven't gotten around it yet.
Sticky IRS. So you mentioned in there having a business card. At what point in a blogger's journey do you recommend them getting that business card? And do you have any personal recommendations about where to get that card?
So I think with a lot of things, your blog might start off as a personal project, and then you start to gain traction. You have more viewers, you have sponsored posts, you have ads on your website, and all of a sudden you're making a ton of money and it's a full-blown business. Even if you're not making a ton of money, it can be a full-blown business very quickly. So as soon as you get started, I would go ahead and look for a no fee or very low fee business checking account to completely separate things. That way you can run all of your income through there and all of your expenses. And then at tax time, even if you put off bookkeeping, you have everything all in one place that you can go back to, and you're not having to search through your personal stuff. If you're a sole proprietor, you can even open fees or very low minimums. If you become an LLC, that's the point where you do need to actually get business-specific bank accounts. So you should no longer use your personal PayPal to accept or pay with and that sort of thing. Make sure you've switched it over to business account and that they have your business tax ID number. And then a good place to look for that stuff is nerdwallet.com. They do a ton of different comparisons. So if you want to look for a no-fee business checking, if you search that plus NerdWallet, they have like tons of different lists comparing local or national and all of that good stuff.
Excellent. So NerdWallet, I think we had a little technical difficulty where you froze in there for just a second, but you're back. So we'll talk about LLCs later. She was telling us that you definitely should check out NerdWallet to look for those different options for your credit cards. And that's about it to recap that in a nutshell. But we'll definitely go back to the LLC question for sure. So we have a question from Michelle. She wanted to know if you could kind of run down what travel bloggers could expense as opposed to all the other niches that we talked about.
Yeah, travel blogging is another one where you need content, so you need to be going places, but the IRS can still deem a lot of that stuff personal. So what I always recommend for travel blogging is reach out to a hotel that is going to be in your location and see if they're interested in a swap for a free hotel night for social media promotion, or you could run their Instagram account while you're there, something like that, so that you have a business purpose for being there and you're not just blogging about your family's vacation, because that type of stuff is what's not going to be deductible. So look for ways, whether, it could be a restaurant, hotel, flight even, but it doesn't hurt to reach out to these companies and share with them what you can provide in terms of your social reach and your website's reach, and see what you guys can work out with for that.
So then if they are able to get a business relationship going where there's some form of compensation, even if that's an in-kind thing, you can still then start expensing what's happening on that trip. Is that accurate?
Yeah, that's accurate. The only thing is to keep in mind is, let's say you were working with a hotel and they gave you 3 free nights in exchange for you taking over their Instagram account. What you need to do is report those 3 nights at the value that you could go online and book them yourself. So that's called the market value. You have to report that as income. So it's like they're paying you, but you're not actually getting dollars. So you still have to report it at the market value, but then any expenses you incur, like your flight to get there, or if you drive, you can expense your mileage. That stuff's now deductible.
Awesome. Okay, so for travels, now we've got our DIY bloggers in here, and they're saying for DIY, I know home decor in your home would be personal, but she's saying, what about tools for projects that they're using to complete things that they're getting paid for?
Yeah, so if you are, let's say that you're working with a company and they want you to do a certain type of DIY post, but you need to go out and buy a special tool for that, that can be deductible. That would be a business expense. If you are just wanting to buy an electric sander for your family to have, and then you might use it a couple times for sanding wood for a project, that's where it's more of a personal expense, that you're just using a couple times for business. So I would leave that off. But for example, like Cricut, like if you need to go out and buy one of those paper cutters to do a project, that could be deductible. Same with supplies to complete any projects that you're working on with brands. So just basically to sum it up, you're saying that if I want that new whatever, the Cricut, or I want a new stand mixer, KitchenAid, and I just need to link it to a sponsored post in some way that is, and then put it in that way when reporting it and deducting it. Yeah, that's what I would do just to be safe, because otherwise it looks like you're just buying things for yourself and blogging about them so that you can deduct them. And that's what you want to stay away from. Because like I said, if that was the case, everybody would have blogs so that they could deduct their life.
Yeah. And then let me take that a step further, because Mediavine, full service ad management, we're all about that. So people are getting compensated for all their posts once they reach the Mediavine level in some way. They're earning a constant income from all that content that they've created, which is the whole point of what we do. Mm-hmm. Does that alter anything in any way with how you can deduct things? Like, I'm creating content to continue to serve these ads, which will continue to make me money. Does that make sense?
I mean, I think you could make the case for that. But for things like clothing and travel, it's still a little tough, because those are expenses that you'd probably incur anyways. So you just have to be careful that you're not going out and shopping for your wardrobe and blogging about it. You're not taking excessive trips just to, I don't know. It's such a gray area, because you do need content to make the money from the ads, but that stuff can be so personal. Like just getting your nails done to look good in a photo shoot isn't necessarily deductible. So keep things separate from your personal purchases. Try to treat it like a business for this gray area stuff, and make a note of the purpose of the trip if you're traveling. If you are buying equipment, maybe make a note in your bookkeeping of what the post was what it was linked to. And I think that's going to be your biggest way to prove your stuff to the IRS, is just maybe over document everything.
Yeah, absolutely. They're saying the gray area, and that's what Michelle just mentioned. It's so hard because you can keep making those jumps of, like you said, my nails are in my hands and pans video, and my nails look bad, so now I'm doing my nails, and it's very hard. It's very difficult to find that gray area. So speaking about you just were mentioning to prove to the IRS. So what system have you found to be really successful to track receipts, keep them, keep your deductions together? What kind of system do you recommend people use?
So I think it just depends on, like, if you're one of those paperless people that hates paper, then I would go the app route. So if you're using QuickBooks Self-Employed, they have a little thing on their app where you can take a picture of your receipt and link it to the expense and then toss your receipt. If you don't want to go the app route, I use Dropbox on my phone. So I'll take a picture of the receipt and then save it to Dropbox. And then you can add information to that image by just putting it in the title. So organize those folders by the time period, but you don't need to get super detailed. Like, you don't need to have a January folder with meals or a January folder with travel expenses. I personally just recommend dumping it all into one monthly folder. And then if the IRS needs that information later, then you can spend the time to organize it, as long as you know that you've been consistent with saving those receipts. Because why spend the time now when your chance is honestly fairly low to get audited? So as long as you can pull that stuff up later, don't spend too much time trying to get it organized. Just make sure you can access it.
I have a question here from Cassie May. We're still talking expenses. Can you deduct supplies for a post if you don't use the project in your daily life? Like, can you make something for a post, photograph and promote it, and then put it away in storage?
Yeah, I think that you could make the case for that. It's not like you are making home decor and then you just happen to blog about it. Yeah, I would say yes for that.
Okay, excellent. All right, so let's move on to everybody's favorite topic, taxes. Woo! Yay. Go IRS, words that no one ever says. So we've got a lot of questions that are surrounding 1099s. We've got a lot of questions surrounding quarterly taxes. So let's talk about this. Zona Marie wrote in when we first announced the live. She was excited about it. She said, love this. How do I calculate quarterly estimated taxes during my first profitable year?
So I think the simplest way to think about it is putting aside 25% of your net profit for federal taxes and then 5% for your state income taxes. So overall, you're going to be looking at 30% of your net profit. So that's I know net and gross is really, like, it's hard if you're not doing it on a daily basis to figure out which one's which. Gross is before expenses. Net is after you deduct your expenses. So you want to match the way you're saving money for taxes the same way the IRS would calculate it. They're going to calculate it off of what is left over after all of the deductible expenses. So I would suggest starting out by putting 30% of your profit each month into a savings account. Even if you decide that you don't want to pay it in just yet, then you have it ready. You have it out of sight and out of mind, and it's not going to be some financial hit to yourself when it is time to pay it in. As that pot grows, if you're at $1,000 or more in there, I would start thinking about paying it into the IRS and the state. And you're not actually reporting any income or expenses when you do that. You're literally just sending them money, which they're happy to take at any point in the year, and sending a deposit in towards those year-end taxes. And then if you put too much in, you get it back as a refund. If you don't put enough in, obviously you'll owe.
Oh, I'm sure the IRS loves giving money back. That's probably one of their favorite things. Okay, so talking about quarterly taxes, and Sonal, or if it's Sonal, I'm sorry if I'm saying it wrong, asked, why do we need to estimate quarterly taxes? Is it not annual tax returns? Pardon my ignorance. And then I had another person ask, do you have to pay quarterly taxes?
So when you are an employee of a company and you have an employer taking taxes out of your paycheck, they're paying that in on a monthly and quarterly basis. So the IRS is getting their money throughout the year. Well, with self-employment, they want to do whatever they can to get us to pay throughout the year, because they want to have that money during the year to invest and spend and all that good stuff. So in order to push us in the right direction of sending it in each quarter, they have underpayment penalties and interest that they will assess if you owe more than $1,000 at tax time. So you will never get a notice from the IRS that says your quarterly estimated tax payment is late. But when you file your taxes at the end of the year, if you didn't pay enough in throughout the year, they will assess a small percentage. And it's not huge. It's not going to be some like life-altering amount. It's a very small percentage, and it's a little complicated. It's not just like a flat percentage, but it's fairly low. So a lot of people do just wait until tax time, figure out what they actually owe, and then send that money in. But like I said, I feel like it's so much less painful to send smaller checks throughout the year rather than having to write possibly a multiple 10, like 5-figure check, which I've seen happen at the end of the year.
So we're going to keep talking more about taxes, but we have a question again from Sonal. She wants to know, is there a written document for bloggers' tax info?
I have some blog posts on my blog that talks about blogging and taxes, but the IRS has not issued any specific like IRS documents that reference blogging. They are so far behind in terms of like modern businesses and internet businesses that they haven't even issued updated guidance on cell phones. Like we have these data charges, but they're still telling us to calculate our business use based off of minutes that we talk on the phone for business. But, if you're a blogger, you might not be talking on the phone for business at all, but you're using your phone all the time to post pictures and do social media and answer emails. So that just tells you how outdated their guidance is, and they just unfortunately are so backlogged and haven't even caught up to that type of stuff.
Yeah, absolutely. And we've been getting same thing with the FTC and things like that in terms of governing laws for sponsored posts and things. They're finally starting to look at blogs, but the government is a big thing that moves very slowly, and the IRS is its own monster. Okay, we've had people requesting that your blog be posted. We're sharing that in the comments for them. Ryan Showers wants to know, are those penalties assessed per quarter, or can you make up for missed quarterlies before the year end?
So the form is kind of complicated, but it figures out how much you should have been paying in each quarter. So even if you pay in all of it at the very end of the year before your taxes are due, because you didn't pay it throughout the year like the IRS would like, then they do assess small penalties for each quarter.
Excellent. Okay. Well, that's not excellent. This was excellent, but it was a good answer. Thank you. Okay, let's move on to 1099s, which is a lot of questions about this one. So how do you know if you should get a 1099 for someone that you're doing sponsored work for? Do you need to be asking them for 1099s?
Yeah, so this question comes up a lot in January. January is the month of 1099s because as soon as the year is over, that's when you can start issuing them, and then they're due to be sent out by the end of January. So here's what you need to keep in mind as a rule of thumb. If you are paid $600 or more through cash, check, or a bank transfer, then you should be issued a 1099. However, you don't need to wait until you receive that 1099 to go ahead and file your taxes, because you never know if that person's actually going to issue them or not. They should if they're supposed to, but it's not on you to tell them how to run their business and remind them to send that out. If they do send it out, just make sure that the amount is correct and matches your records, because you need to report your income regardless of whether you get a 1099 or not. But if they report too much and then the IRS sees $20,000 reported under 1099s for you, but you only report $19,000, there's not even a human involved. You will automatically get a letter in the mail from the IRS saying you owe this much more because we're showing a different number. And then it's a whole thing of proving why that's wrong. So Keep an eye on the totals. Make sure that you're always reporting more or equal to the number of 1099s that you received. And then on the flip side, for you, if you are paying for business services that are $600 or more through cash, check, or a bank transfer, then you need to be issuing 1099s. You can work with an accountant to do this. There's tons of online websites that will facilitate this process. It's fairly easy, but make sure that you do it.
So we've got lots and lots and lots of questions, and we had someone asking back about expenses. Vanita asked about expenses, but Vanita, we talked about expenses. We'll try to circle back around to that one, but we did talk a lot about expenses. So what about any tips and tricks for juggling all of the 750 gajillion 1099s that bloggers are going to have at the end of the year?
Yeah, so if you're getting them, what I would do is I would just scan them as soon as they come in, or take a picture, a good quality picture, and save it to a Dropbox folder that's just for 1099s that you receive. And then what I would do is take it a step further and save in there a spreadsheet that totals them up. So you're tracking those as they come in. And that way it'll be super easy when you're actually ready to file your taxes to just make sure, just double check real quick that the income you're reporting equals or exceeds the total of the 1099s you received, and then you'll be on your way. You don't have to enter them individually into your tax return. You can just enter your sales number on your Schedule C. So don't worry about a bunch of data entry involved with them. Just make sure you are keeping an eye on the totals there.
Is there someone that you need to send the 1099 to?
Yeah, so anyone that does business services for you. So this is, this would be an accountant, your web designer and developer. If you have a virtual assistant, or if you hire a videographer to help you with videos, those types of services, you would need to send a 1099 to. They are not for a nanny that might nanny for you. I get that question a lot. And they're not for buying products. So if you buy over $600 of product from a company, since it's not for a service, you don't need to issue them a 1099. And then one thing to mention here, I get a lot of questions surrounding PayPal, friends and family, and then Venmo. So if you're sending through PayPal, regular way, and fees are taken out, then you do not need to worry about 1099s for those people. The reason is because PayPal is going to take care of reporting in the information regarding those transactions. If you send through PayPal via friends and family where no fees are getting taken out, same thing with Venmo, no fees are getting taken out, those methods are technically not supposed to be used for business, and because of that, they are not going to be reported on 1099s. So you would need to report those amounts.
Is there, I'm going to jump in real quick with a more general one, and then we're going to get back to taxes, but is there a software or a program you recommend to publishers, to bloggers, to help them keep track of all these things?
Yeah, so bookkeeping is going to be the big key here. What I do is I put all 1099 type payments into a bookkeeping expense account called Contractors, and I can also see what account it was paid from. So if I paid that expense with a credit card, or I paid it with PayPal, then I know I don't need to, I can just, ignore those and worry about the rest. And so at tax time in January, I will export the detail of that account, and then I can just sum everything up in a spreadsheet really quickly. There's also programs like, I think it's 1099 online, stuff like that. There's a bunch of different variations, but that's the one that comes to mind. With those, they let you manage the actual process of the 1099. So they'll let you send out W-9s to collect the information that you need for the 1099s. And then a lot of them will automatically put that information into the 1099 for you. You just have to add the amount that you paid. So if you're going to do it yourself, I would not try to buy the paper forms and handwrite them in. I would pay a couple bucks per form online and do it that way, because they'll e-file it for you too.
Well, that's great. That's very helpful. Okay, let's talk about LLCs. Okay. Tegan Goddard has asked, he wants to know how the new tax law, I don't know if it's a he or she, and I just have the question printed. I'm sorry, Tegan. They want to know how the new tax law impacts bloggers set up as pass-through LLCs. Can we get an unlimited 20% deduction because we are not lawyers, consultants, or accountants?
Yeah, so the 20% deduction, that phases out at a certain income level. It's actually $157,500 for personal or for single people, and then $315,000 for married filing joint. So that phase out is what happens with lawyers, consultants, and accountants. But actually, it's worded in a way where it could also apply to all service providers except for architects and engineers. So that's another one of those things where with the tax law changes, they weren't super clear on that type of thing. And the accounting agencies in the US have requested the IRS provide more guidance, because they didn't say these specific job types. They just said professional services, which could involve a whole lot of different types of businesses. So it's not even an issue. You still get the 20% deduction if your income is below those thresholds. It's once it gets over that it could start to phase out if you fall into that professional service category.
Excellent. That was a good, very well. You have no choice. It's a vague law, but I had my friend on that was a lawyer, and her answer to everything was, "It depends."
Yeah, I know. I hate giving that answer so much. I wish the IRS was more clear on that stuff, because I always like to prove everything I say with, here is exactly what the IRS said. But on so much of this stuff, especially with a more modern business like blogging, there's not anything, it's kind of like interpret it as you wish and then see how we decide it if we ever decide to look into it. So it's frustrating.
It is. They need a Supreme Court there at the IRS to take this to. So continuing on with LLCs, Allie Roomberg wants to know, are there any tax benefits to having an LLC?
Yeah, so with an LLC, if you're just switching from a sole proprietor to an LLC, nothing changes for your taxes. If you're a single owner, you're still going to file a Schedule C for your business. Really, the only thing that you're getting is legal protection. And since I'm not a lawyer, I won't go into the legal protection side, but that's really all the LLC is going to provide. However, the next step up from an LLC is an S corporation. So you do need to become an LLC first, and then you ask the IRS essentially, is it okay if I am treated as an S corporation for tax purposes? And that's the business type where you do see some tax savings. That would be like a whole other live that we would do on that topic. So it can be really in-depth, but just know that there is tax savings associated with that, but you want to have a profit level of at least $50,000 after expenses are taken out before you even start considering that.
So, yep, that was the question. That was the follow-up from Audrey Roberts. She wanted to ask about an LLC. She said, is it best for an LLC to file as an S corp?
Yeah, it can be a very good thing, but since there is a payroll requirement for the owner, then it just adds in extra expenses, extra complexity. Some people just don't like having to deal with the payroll. So that $50,000 threshold is a good point where the tax savings starts to make you say, okay, I guess it's worth the extra pain to get several $1,000s of tax savings.
Yes, I'm not a small business owner, but I can't imagine anything to do with the IRS not involving a lot of steps, a lot of them. So Cassie May says, if you file jointly with a spouse who has a, quote, traditional job and you start paying quarterly estimated taxes, are you paying them just on your business or on your combined income?
Good question. So your spouse's income through a traditional employer, they will have the taxes taken out of their paycheck. So those should, in theory, cover any taxes due from their income. So when you're calculating your quarterly taxes, you'll just want to be looking at your own. If you look at the IRS estimated tax worksheet, it's way more complicated than just doing the 25% and 5% because it's taking into account any personal deductions that you have. Maybe your spouse withholds too much tax, so they take into account that because it can offset your tax. So it can get real complicated really fast. So to keep things simple, just look at your own profit, withhold 25% for federal and 5% for state, and that should be enough or even extra.
Excellent. Okay, so Nala's back again. She said, I have mine registered as DBA. How do I withdraw money from my income, and how do I show or report it as is?
So if you are a sole proprietor doing business as, which is what the DBA is, then you can just transfer money from your business account to your personal account. The IRS doesn't consider that a business expense. So they will tax you on your profit. So income minus expenses is your profit. They will tax you on that regardless of whether you pay yourself $1 of it or you pay yourself all of it. So that's the thing with sole proprietors and single owner LLCs. The difference between, like, if you were a sole proprietor doing business as whatever your business name is and an LLC is you need to keep things separate when you're an LLC, meaning you can't just go to Target and buy shampoo for yourself with your business card because you forgot your personal card at home. That's an example of commingling and hurts your liability protection. So in that case, you need to go back home and get your card. You really don't want to mix things when you're an LLC. But to pay yourself when you're an LLC, you will just transfer money to your personal account or write yourself out a check.
Excellent. Good to know. Okay. Michelle was in there about a question about invoicing in 1099, so I just wanted to throw her in real quick. Michelle Hall says, so if I buy a video from someone who makes a video for me and they invoice me for the service, do I still need to do a 1099 on them?
Yeah. So even if they are sending you an invoice, they would still count as a contractor for their service as long as you have paid them through a cash check or a bank transfer. You are receiving an end product, which is the video, but you are paying for their service, it's majority for a service. You didn't just go out and buy a DVD of some random people on it. That would be a product. When you're working with a videographer who is making that end product, you're still really just paying for their service.
Excellent. Okay, Sonal says, thank you, girl, we got you. Okay, so Morgan Smith McBride. I make my quarterly tax payment based on my tax liability last year, but this year my income has increased significantly. Woo, way to go. Am I required to increase my payments now? I know it will go up at the end of the year, obviously, but how do I know how much to increase it mid-year?
So I think the best way is just to use those percentages. So a lot of accountants will have you do quarterly taxes based off of your previous year's income. That's just the way the tax software works, and it's super easy to do. But if you know that your income has increased quite a bit, make sure that you have done your bookkeeping first and then see what your net profit is so far, and at least make sure that you're setting aside that money for taxes so that you're prepared. So again, I'll say it again, 25% for the federal tax and 5% if your state has income tax, and that should equal or slightly exceed the amount of tax that you'll owe.
Ryan Showers, are these 1099s only if it's someone hired directly, or does this apply for services like Upwork?
This applies to like Upwork too. So those would be considered contractors, even though you're going through another service. But if you pay them with a credit card, then you don't need to issue a 1099.
Perfect. All right. We are going to segue away from taxes, which I feel like will be the signal for all the tax questions to come. But I was going to talk about a little bit about retirement and future planning, because I think that's a very, can be a very challenging thing for bloggers to know. So when there's not a corporation or a company or a parent company saying, put this much in, we matched. So can you talk a little bit about retirement plans for influencers and how you see that work best for people?
Yeah, I love this topic because I think that when you stop becoming an employee of a company, like you said, it's not being automatically taken out of your paycheck. And we don't want to work forever. I mean, it's fun to do this stuff, but we don't want to be 90 years old without retirement funds to be able to live off of. So, the earlier you can get started putting money away, the better, because it will start to compound on itself and you'll just keep increasing your savings for later. There's a lot of different options for retirement. So the two things you need to know is if you have a traditional plan, that means you're getting tax savings now, today, at today's rates, and then you don't get taxed when you take it out later. If you have a Roth plan, that means you're going to put your after tax money in now, so no tax savings now, but you don't pay tax on you do pay tax on the earnings when you take it out later. So if you feel like you're in a higher tax bracket right now than you will be, maybe if retirement is 30 years away, you think you'll be in a lower tax bracket, then a Roth, maxing that out would be a great option. So the biggest thing is get in a system of putting money away for that. So even if you're just starting out small with $25 a month, and then as your profit grows, increase those contributions. It's going to be so much easier if you get in the habit. It's like going to the gym. I mean, it sucks to start, but once you get in the habit and you keep doing it, then it's a lot easier and you're proud of yourself. Because my favorite thing is to tell my dad, "Hey, Dad, look how much money I have saved away." And he's like the happiest guy in the world. So that's like my favorite thing to do. But do that instead of spending money on useless things that your business doesn't need. So if you are at the end of the year and you're like, "Oh, I have $10,000 of taxable income and I don't want to pay tax on it," instead of trying to figure out what types of things you could buy that you might necessarily need, think about putting that money into a retirement account. If you put it into a traditional plan, it will still reduce your taxable income, but you get to hang on to that money. It's still yours, and it lowered your tax. So you're not having to give the IRS or your state extra tax money, which is the goal.
So Michelle Price is saying, wait, that's backwards. Roth is after taxes and not taxed when you withdraw. So if you assume taxes will be higher later, do that. Regular IRA is pre-tax income and taxed when you withdraw.
Okay, so traditional is you get tax savings today. So if your tax rate is higher today, then it's better to do that. If a Roth is the opposite, so you put in after tax money now, and then you don't pay tax on it later. So if your tax rate is going to be lower later, you want to have the tax happen when your tax rate is going to be lower. So I may have said it backwards. Thank you for correcting me, but traditional is tax savings now. Roth is tax savings later.
Can you make some recommendations on that? Maybe a little bit more specifically about who maybe should fall in where?
Yeah. So for Roth is kind of limited. So if you have a very high income level, that tends to get phased out around 180, 190,000 in profit or net income. So that one is going to be just kind of like a bonus. I kind of think of it that way. Traditional would be like a SEP IRA. That's probably the most common, the easiest one to do. You can contribute to a SEP after the tax year is over up until you file your tax return. So that's the one that most of my small business owners start out with. It's definitely not like if you're looking to really stock away money, look at the solo 401k. That's going to be another option for small businesses. That one has even higher contribution limits, and you can contribute as an employee and an employer. So that would be another one. And I honestly, like, I feel like when a lot of my clients, their blogs start getting large enough to start working with an ad company like yours, that's when they're like, oh my gosh, I have so much money. I don't know what to do with it all. That's when you really want to start putting it away, because it will lower your taxes, and that those taxes can get really out of hand if your income has kind of blown up for you. So the other one is a simple IRA, and that one's usually used if you have 1 to 100 employees. So with the SEP, you have whatever contribution percentage you give to yourself. If you have employees, you also have to contribute that amount. So it's not, if you're really wanting to max things out, it's not necessarily great if you have employees. Same, the solo 401k is called a solo because it's meant only for one employee. So once you have more than just yourself in the business, you'll really want to think about which plan is the best for you. And a lot of the websites like Vanguard, they have them all in a table for you to compare to before you decide.
Excellent. And that was actually we were going to talk about 401ks, and you've already covered it all because you are excellent. So everyone already has all of your retirement advice in preparing that. I wanted to kind of skip back a little bit. Cindy Ownby wanted to know, how do I know what and when to pay into Social Security?
So Social Security and Medicare are actually the two parts of self-employment tax. So when you pay that self-employment tax, that's your way as a self-employed person to pay into that. There's not an extra tax that you're paying or an extra place you have to pay. It's all taken care of with that self-employment tax. And one thing to note is that 25% and 5%, that when you make that 25% payment to the IRS, that's a combination of your income tax and self-employment tax. So that's how they're getting that money from you.
Perfect. So you're already good to go, Cindy.
Yeah.
What a great relieving thing to hear. So let's talk a little bit about this real quick. People who are not yet blogging full-time or are not interested in blogging full-time, they have a full-time job and then they have the money that's coming in from their website. Do you have anything special for them that you can offer to help them kind of keep track of everything, ways to file, just general things like that?
So to keep track of everything, I mean, you're already busy with your day job. You're busy trying to create content for your blog. So you don't need to add on like another part-time job of being a bookkeeper and tracking everything. So, but you still need to track it all. So you want to find the thing that's going to be easiest for you to keep up with. So if you are really good with spreadsheets, get a spreadsheet set up and have a reminder on your calendar to go in once a week or once a month and update that spreadsheet so that you can keep an idea of how much money is coming into the business and how much you need to be saving for taxes. Same thing with like QuickBooks Self-Employed is a really good option. If you don't have employees and you don't carry an inventory, which that's really not, I mean, unless you're an influencer who has opened up an online shop, that's going to be a really good fit. And they have added mileage tracking. I already mentioned their receipt. You can take a little picture with your phone app. And then the other nice thing is, like, let's say you're in the doctor's office waiting on an appointment, you can pull up the app and just categorize things right there. Super easy. So I wouldn't go into the full-blown QuickBooks unless you have an accounting background or you plan to outsource it. But this self-employed version that they've recently created is simple enough that as long as you keep up with it, it's kind of hard to mess up. And then in terms of having, thinking about your day job and your blogging income for taxes, don't assume that your day job income or withholdings are going to cover the taxes from your business. Even if you don't feel like your blog is a business yet, think of it as a business and still set aside money for those taxes. If your day job happens to actually cover those when you do file your taxes, think of it as a bonus for yourself, but don't spend that money until you have actually finished your taxes and you know that you don't need that money for them.
That is such amazing advice. And we encourage our publishers to think of it as a business, to treat it as a business, the way they interact with brands, the way they view their setup, all of that. Treat yourself like a business person and you will have a business eventually, even if it's not true right now.
Mm-hmm.
So we have a couple more questions and we're almost out of time. You've been amazing. So let's get a couple more in. So what questions, so we've kind of been skirting around this and we've been having a lot of people talk about doing it themselves and DIYing, but there are just some times when you need to outsource. Like it's not your thing, you don't have time, you want to make sure it's done right. So when would you recommend that being the place, what place would a blogger need to be at to start outsourcing some of their financial stuff? And what kind of questions should they be asking a potential accounting professional before working with them?
So in terms of what place you should be in, I feel like it depends on your level of comfortableness. I don't know what the right word is, but however comfortable you feel with doing your own numbers. So if you have a background in accounting or even just in the numbers world, and you feel pretty good about using TurboTax and you feel like you have a good understanding of the questions they're answering, there's no harm in using that to get your taxes done. The only downside is you're not going to have an accountant checking in with you each quarter and having some place to go for a quick question. So that's the downside to that. As your business grows, I mean, there's not a magic number. Like if you hit 100,000, you should definitely be working with an accountant. There's not necessarily a magic number, but if you feel like it's grown and it's out of your control, before it gets to that like out of control point, start looking for an accountant and start asking around for your other friends, other groups that you're in, and say, hey, who do you guys use? Who do you recommend? Because CPAs can work with people all over the US because of our license. So referrals are the best way to find somebody that you can trust and is doing good work. If you find a couple of them and you're going to interview them, I always do an initial 15-minute call just so we can make sure that we feel good about each other. It needs to be both ways. And you can usually get a good sense of that on a short phone call. But just ask, do you have experience in my niche? Have you worked with similar businesses like mine? That's going to be the key thing, because if you go to some super small, super old guy who has never written a blog before, he's going to be like, wait, how do you make money? People are paying you to, they're just like, their mind is blown. So someone with experience, someone that you feel like you can talk to easily, they're not talking down to you. Those are going to be the most important things. And then make sure that they are actually have the capability to respond to you. You might have found the best bookkeeper or best accountant in the world, but if they're so overwhelmed with work that they can't answer your email within a couple of days, then you're going to get frustrated and it's just not going to be a good relationship. So I would even add that to your list too.
Yeah, agreed. They could be the best, but if they don't have time for you, bye, Felicia.
Yep.
Okay, so I'm gonna ask you our last question because we are almost out of time. What I was gonna ask for our last one, which is, what are the top 3 things that bloggers can be doing year-round to keep their finances and accounting in good shape? I'm gonna give you a second to think about it. I'm gonna do a couple of quick announcements. So it is the last summer of live, guys. It has been amazing. And I just want to say thank you so much for being along on this journey. We didn't know if it was going to work, and it's been incredible. And we couldn't have done it without all of our amazing viewers and your questions and your support. So we really appreciate it. Do not despair, though. We will be back. So while it won't be the Summer of Live anymore, we'll be shifting over to Teal Talk, which is going to be a bi-monthly. We're going to keep it on Thursdays. And we are starting again on September 13th. And I will have the man himself there with us, Mr. Eric Hochberger. We're going to talk about videos. I'm sure we'll talk about site speed because it's him. So we're going to have another one of those AMAs with Eric, and we're so excited. We're going to keep going. We'll be back every month. So don't despair. We'll announce more to upcoming. I think we should have Michelle back because she's been dang incredible at this live, and she's answered all the questions perfectly. And I so appreciate her having her here. So let's give her time to answer this last question. The top 3 things.
So I think the first thing is bookkeeping, whatever way that you want to get it done, whether it's a spreadsheet, working with an accountant, or using a bookkeeping software, get it done, put a date on your calendar, and make time for it. The second thing is the quarterly taxes, because that I have seen that crush people and overwhelm them so much they don't want to do business anymore because they just didn't have the money or a plan for it. So if you can make a plan to set money aside and be ready for those quarterly taxes, when tax time does roll around, you are going to feel so much better if you have only a tiny payment to make, or you might even get a refund, which would be a miracle if you're self-employed. So quarterly taxes are number 2. And then number 3, I would say, would just be to, whether you work with an accountant on an ongoing basis or not, find someone that you can ask questions to, because the internet is great, but there are a lot of different opinions. And unless you're getting your answer straight from the IRS or your state, you don't know if that applies to you or not. So have someone that you can go to be a reference and be able to ask questions to, so you're not just having that stress on your shoulders of not knowing.
So, and a great person to ask that would be you, who I just called Michelle in an appalling.
Okay.
I was reading a comment from someone named Michelle, and then I just said Michelle right into the camera, and I am appalled. So, Amy Northard, you are an amazing resource. Tell people where they can find you, because you are a very trustworthy source for this information.
Oh, thank you. My website is amynorthardcpa.com, and we do post quite a bit on the blog. So look out there for lots of good free information. If you ever are interested in my behind the scenes of what it's like to be a work from home accountant, that sort of thing, I share lots of pretty calculator pictures on my Instagram. It's CPA on Instagram.
Excellent. And you actually just shared an amazing, Susanna's already on top of it. You wrote about a great post on our blog that went out earlier this week about 5 common bookkeeping mistakes that people make. So check that out. We're linked all the way up to Amy. Susanna just linked to her again. So you've got every way to get in touch with her. Amy, thank you so much for spending the afternoon with me. And I apologize again for calling you Michelle. I know your name. It's Amy.
Thank you for having me.
Thank you for coming. And everyone out there, have a wonderful Labor Day weekend. Soak up those last little bits of summer, and we will see you in 2 weeks for our first Teal Talk. Thanks again, you guys.
Bye.
Bye.